Hello, I'm Mark Starosciak, Managing Partner with Infinium Investment Advisors. You've tuned in to our market update for November 2014. And as a reminder, anything that we talk about today is purely for informational purposes. It is not a recommendation to buy or sell securities or follow any investment strategy. Infinium does not provide tax and legal advice and always consult your own financial advisor before making any investment decisions. All right, so where are we at this stage in this bull market that's been going on now since 2009? And that is, there's just really been a state of confusion about everything. It appears as though the markets and the economy aren't doing so hot. If you were to ask folks out there, certainly our clients and people that we talk to, generally speaking, they're rather cautious and confused. Why? How in the world can the market be going up so much? And that's a great question, but it starts to make more sense when you really peel back the onion a bit and start to look at it. But generally speaking, folks are confused about what's happening. So when you turn back, this is just the S&P 500 going back to the financial crisis. And you can see from the graph that this was a huge drop, 55%. Starting back in 2007, 2008. What really kicked that off was Bear Stearns and Lehman Brothers, those big financial institutions failing. So you had a huge drop. Investors lost half their money if it was in just a stock market index like the S&P 500. But interestingly enough, since that's happened and we're closing in on close to 6 years, the markets have recovered all of that and more. And again, the fascinating thing about this is it's come at a time when there's been a ton of uncertainty and all kinds of reasons to not believe that the stock market can go up, yet it has. And many would argue, we could spend days arguing why that's happening and will it end. But nonetheless, the markets are up. And they're up substantially. So if you've been on the sidelines or been too conservative, you have missed out, irrespective of whether or not this ends badly at some point. It hasn't yet. And again, if you've just stayed in the market, you've got it all back and more. That's an important lesson for investors to take away from this period of time. However, we are overdue for a 10% stock market correction. We've come very close several times in the past 3 or 4 years. Most recently in October of this year, we had small cap stocks, or the smaller companies here in the U.S., go well over 10%, but the general broad stock market indices did not quite reach that 10% sort of magical number for a correction. So it's been over 39 months since we've had one of those. We typically average one of those every 20 months. So again, you have this extended period of time where markets just keep rallying in the face of a lot of uncertainty, and there's plenty to worry about, right? From our national debt that just keeps ringing up to the Ebola crisis. You've got ISIS and the Islamic jihadists making a lot of noise and causing all kinds of problems in the Middle East particularly. And then, of course, you have what's happening in Russia and how they seem to be enamored with the Soviet-era tactics here under Vladimir Putin. So there are all kinds of geopolitical things going on and issues here in our country as well that people have to worry about, yet the markets keep going higher. So from our perspective, where does that leave us? Well, history would tell us that bull markets usually don't end when folks, regular investors as well as professionals, feel doubt and fear. And I can tell you, in the cross-section of clients that we have, generally speaking, they are not overly optimistic about what's happening. They are quite the contrary, very cautious. And those are the conditions, the psychology that doesn't lend itself well to a big bear market. Certainly, again, corrections are normal. We're overdue for one of those. But to see a really big downturn, you sort of need to have everybody on board with the idea that the market can only go up. And, we're just not seeing that today. So from our perspective, the trend probably continues. And that is the short-term We've seen volatility come back, particularly here in October. That's actually a good thing. That's a more normal market. The intermediate term, it really could go either way, but at this stage, particularly now after the markets have rallied into late October and early November, we think the intermediate term is very much intact, and certainly the long term. So it depends on how you want to define it, but over a year, let's say, for our purposes, we'll call that the long term. And that clearly is pointing up. There's nothing really at this point to indicate to us that the markets are going to reverse. Now, of course, that can change. It could change any day. But right now, the state of the game is it's positive, and we're not seeing the road signs that would point to a big downturn. Yet we always have to be cautious. So again, until the psychology changes, this is probably the lay of the land. So what do advisors or investors do now? Well, get a meeting with your financial advisor. If you haven't spoke with them lately, it's time to sit down, relook at your portfolio, and measure that against your financial plan. Again, if you don't have a financial advisor, start looking. We absolutely believe that you need a partner. This is just too tough, and it's just too important to to go it alone. So have a partner, find someone that you trust, who's good at what they do, and who can help navigate you through all of this uncertainty that's out there and just keep you on track. Also, we'd like to offer you a download of our latest white paper, Choosing Between Insurance Agents, Brokers, and RIAs. I think it's really important to understand who you're dealing with. If you don't have an advisor, this is a terrific piece, very short, 3-4 pages, that can help you zoom in on the type of individual that you should be partnered with on your financial matters. So with that, I'm Mark Starosciak. We'll see you next month.